that. I can't really see exactly what it is yet, but I'm believing that that's the A380-800 from Emirates. It's about that time of day. I think it might be. It looks like it is. There's nothing else that's that big. There's nothing else that's that grand. You haven't flown until you've been on the Emirates A380. I could see it from miles away. Of course that's what it was. Look at that goddamn thing. I miss that thing. I miss it so much. I just want to get back on it. I want to get the hell out of here. Yes! 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 Take me away! Well, following up on the last video that I made about high interest savings accounts, I felt like mentioning this story right here that you may have heard something about, but then again, if you're not in the housing market, maybe you haven't heard about it or paid attention to it. Biden to hike payments for good credit home buyers to subsidize high-risk mortgages. So basically, they give you a quick rundown. Home buyers with good credit scores will soon encounter a costly surprise, a new federal rule forcing them to pay higher mortgage rates and fees to subsidize people with riskier credit ratings who are also in the market to buy houses. So before I even start reading this, I think it's important to put a little bit of background on this. Ever since Biden got into office, the Biden administration has been trying to do away with credit scores. If you look it up on Google, you'd see that they've wanted to try to figure out a way to knock out credit scores. Now, why is that? Well, credit scores apparently seem to be the only quote-unquote check and balance. In our government, we have what's called check and balances, right? So basically, you have the executive branch, the judicial branch, and you have the legislative branch. And 2 out of those 3 can override the third for the most part. So the executive branch itself can't run amok without the legislative branch impeaching the president. The judicial branch supposedly is there in order to just interpret the new laws that the legislative branch is making just to make sure they're constitutional. But all that's besides the point. Check and balances is important. Check and balances happens in many ways. And it just so happens that with the credit system is there to check and balance poor behavior or to check and balance, under earners from purchasing things that they shouldn't have. If you're not earning enough money, then you shouldn't have a house. That's not to say that you shouldn't have a place to live. You should be able to earn enough to get an apartment. And if you can't afford an apartment, then typically this government has things in store like Section 8 and other such help. But the problem with the welfare state is the more the government interjects itself into it, the more money is needed because enough is never enough. So the way it's supposed to work is you're supposed to have a supply and demand system. But the government has grown the welfare state so much that at this point, the supply and demand system doesn't work properly because government's involved. So what they're talking about is the fact that if you have a high credit score like me, now, and by the way, I've told you the story numerous times. I'm not going to tell it again right now anyway. When I got out of college, I had shitty credit. I had a 500, 530. Those were my best credit scores, right? I couldn't buy anything. Couldn't buy a car, couldn't buy a house. But sure enough, I worked on paying down my loans and paying down my debts, and I started building my credit. And sure enough, after taking the train and taking the bus for a while, I was eventually able to afford to get a car. And the interest rate was high as fuck. I had like a 27 point something percent interest rate. And I kept paying on it on time, and I kept improving my credit up until the point where I was able to refinance into another car. And, as I kept going, I was able to improve my situation better and better and better to the point where I was able to get my cars either at almost no interest rate at all, or I was able to actually buy them in cash. So the thing about it is When you force somebody to actually perform or force them to improve, typically they're going to get better. But if you just interject government into it, the people never improve. They never learn their lesson. They never get better. When I had shitty credit, I didn't even have a regular bank account. I was using check cashing places. And from what I also remember, when I was finally able to get a actual bank account, I stopped using my credit card altogether. Well, first of all, because my credit was pretty much screwed, but I stopped using credit altogether. I started using debit card. And the debit card forced me to spend within my means and to save within my means. But the government's answer at this point, because you've got a lot of voters who are willing to vote for more welfare if they can get it, the voters just, all they want is what they want. But see, the beautiful thing about it is because of the supply and demand system, these people can't just go out there and just demand a house. They can't go out there and protest and demand a house. There was one woman, I think she was in Walmart last week, and she demanded like reparations in a store or something, and she ended up getting her ass whipped. And the thing, she chased down a security guard and everything, and he gave her a 2-piece special right in the face. It's like you can't just demand certain things. You got to work for this shit. But we've got a new generation of lazy-ass kids that do nothing but sit on TikTok and play fucking video games. And then they demand shit out of their parents, and their parents are stupid enough to just give it to them. So what does that do? It breeds a shitty voter. And the voter think, oh, yeah, well, you know, all I got to do is riot. Or I got to, what is it called? Loot. And I can just take what I want. Or I can go into the store and I can refuse to pay and I can demand that the store give it to me for free. No, you get punched in your face. And that's if you're lucky. Because we've all seen plenty of, these how should I say, these incidents where it doesn't turn out so well. But bottom line is I was forced to perform. I was forced to do better. And that's why I built my credit up. And now I'm sitting on an 850 credit score. And I can demand the lowest of interest rates if I want to take out a real estate loan. The fact that I'm black has nothing to do with it. I got that way because I improved my behavior over a certain period of time. But these people out here spending their last dime on a credit card, not paying their bills on time, and they think that they're supposed to be able to, access my credit card. Well, to quote Charlton Heston from Planet of the Apes, get your damn dirty hands off my 850 FICO score, you damn dirty ape. Okay, so anyway, let's read the story. It says the fee changes will go into effect May 1st as part of the Federal Housing Finance Agency. See, whenever you see a government acronym that long, you know you're in fucking trouble. Push for affordable housing, blah, blah. Now, and let me tell you something. And before I'm going to read the story. I hate to divert, but let me tell you something. I have no idea how either House Republicans or even the Democrats should have stopped this before this got pushed through. The Biden administration's been trying to fuck over the credit system since he got into office. The reality is the credit system is the only thing that stops these people from going even deeper into debt. Half of these people would sign their left kidney away if they could get certain things. A yacht, a Bugatti, I don't know. But these people are really that freaking dumb, and they really would do it. But the thing about it is the check and balance of the credit system is the only thing that stops them from being able to do it. It allows students to go deeper and deeper and deeper and deeper into debt. It feels to me, and I hate to keep diverting, it feels to me like the reason why we're driving up all the student loan debt is because what they're basically doing is creating career students who basically live in school. It's almost as if the government wants to keep people out of the workforce, and it's like, okay, yeah, go to school and you live on campus and you stay here. Yeah, you're going to drive up a huge amount of debt, but we're not going to worry about that right now. It feels to me that that's exactly what they're doing. And in the meantime, while they're driving up all that debt and keeping these kids in school, what's ending up happening is these kids are delaying childbirth, delaying marriage. And in order to bring our numbers back up, they're just bringing in more illegal aliens. Because I don't know. But where was I? It says, and they will affect mortgages originating at private banks across the country. The federally backed home mortgage companies, Fannie Mae and Freddie Mac, will enact the loan level price adjustment. So that's the new thing. Be wary when you hear this acronym, LLPA, loan level price adjustment. It's a soft way of saying communist FICO score. And you know what bothers me more than anything? Whenever I bring up positive aspects of what China's doing to make sure that their people are getting ahead, some people, oh yeah, well, they're communists and they're socialists. I'm like, well, what the fuck do you call this? You stupid idiot. So anyway, let me keep going. Mortgage industry specialists say home buyers with credit scores of 680 or higher, I have an 850, goddammit. For example, about $40 per month more on a home loan of $400,000. Home buyers who make down payments of 15% to 20% will get socked with the largest fees. Now, let's just be clear. This doesn't apply if you've already purchased your home and you already have a mortgage and you're already living in it. Like, for instance, right now I'm laying in my bed, I'm looking up, talking to this phone, making this video, and I'm looking up at my ceiling fan. I'm already set. I got my houses. For everybody else, however, for the people who are trying to play by the rules and the people who are trying to build up their credit and the people who are trying to save money and the people who are trying to buy a house in this ridiculous housing climate where the average median price of a house around here in New York anyway is about $500,000, $500,000 at a 6 or 7%. Just think about that for a second. So now they're telling you that you played by the rules, you built up your credit. Now we're going to hurt you a little bit more, and we're going to make it so that your loan costs you more because we're subsidizing those people who have shitty credit scores. Now, normally this would bother me a lot more than it should. However, because of simple supply and demand, they don't even have enough housing supply out there for this to really make that much of a difference. There are houses out there, but anybody whose credit is that bad and anybody who's in that much dire strait that they need the government to step in, chances are they wouldn't be able to buy anything anyway. Chances are these people are going to end up on Section 8 or they're going to end up in some quote-unquote affordable housing, which, basically the ghetto projects or whatever, that they lump these people in just to keep them working in an area that they otherwise would have abandoned a long time ago. Well, the bottom line is housing affordability and availability is so low that I don't really think that this is going to make that big a deal anyway. It's just that them putting something like this out there just tells you that they're working against you 24/7. They're literally working against you. So, what is it? It says the new fees will apply only to Americans buying houses or refinancing after May 1st. Yeah, well, that's just about everybody who wants to buy a house after May 1st. Lenders and real estate agents say the changes will frustrate home buyers with high credit scores. You goddamn right. But the sad thing is, unless they're actually paying attention, they wouldn't even realize that this is affecting them. Like, if I tried to buy another house right now, unless I got locked into a rate before May 1st, I'd be fucked. But here's the problem. Even if you get locked into a rate, you're still above a 6%. So what's the point? You're paying damn near twice as much as you'd be paying if you had bought it, 3 years ago? So, what is this? Lenders and real estate agents say the changes will frustrate homebuyers with high credit scores and homeowners seeking to refinance because the rule punishes them for relatively strong financial positions. The changes do not make sense. Penalizing borrowers with larger down payments and credit scores will not go over well, a senior loan officer, Ian Wright, said. It overcomplicates things for consumers during a process that can already feel overwhelming with the amount of paperwork, jargon, etc. Confusing the borrower is never a good thing. He said the rule will cause customer service issues for lenders and individual loan officers when a consumer won't understand why their interest rate and fees suddenly changed. Well, frankly, if I was these people and I had high credit, I'd be suing for discrimination. That's what I would do. Because if you really think about it, that's exactly what this is. If they're discriminating against you because you have a higher credit score in order to benefit somebody with a lower credit score, then yeah, that's absolutely what discrimination is. This is basically, what is it called? Affirmative action. Only now there's no color on it. Like you, imagine this. Imagine you're a white man who's got an 850 credit score, and now you've got to subsidize some younger white man who's got a 520, and you've been doing your best to keep your credit high, and he's been using his credit card to buy like marijuana and like flip-flops and sandals and shit. So in fact, you did your best to keep your credit score high, so you drove around in a Toyota Camry, but this stupid asshole went out and bought a Subaru WRX because he wanted to look cool. Or maybe he bought a Hellcat Charger or something, and that's why his credit's fucked up. So, frankly, there's no color on this. This is worse than affirmative action. This is trying to be egalitarian by forcing everybody to be equal through poverty. That's exactly what this is. It doesn't even matter what your color is. You could be a black man with an 850 credit score like me, and now you got to subsidize Pookie and Ray Ray, who their credit is fucked up because they spent all their money on Air Jordans and weed. Yeah. So I have a problem with this. I have a serious problem with this. This is discrimination. So as far as I'm concerned, if your fees change and you notice they change, no, you should sue. You really should sue. You'd be like, yo, listen, this is discrimination. Clear and simple, this is discrimination. This is absolutely, that's exactly what this is. It's discrimination. But where the fuck? I gotta get rid of this stupid T-Mo thing. Where the hell did this thing come from? It's T-Mo. Okay. It says, let's see. The housing market has been hit hard by a series of Federal Reserve interest rate hikes that have driven mortgage rates above 6%. Roughly double the level from early 2022. The Fed has raised rates rapidly to bring down inflation, which hit a 4-decade high of 9.1% last summer. In the wake of a 3% point interest increase in mortgage rates, now is not the time to raise fees on home buyers, Kenny Parcell, president of the National Association of Realtors, says. Okay, under the new mortgage financing rules, home buyers with riskier credit ratings and lower down payments will qualify for better mortgage rates and discounted fees. Now, let me just say this. First of all, if your credit sucks, chances are you're not the person who should be buying a house anyway. But even then, with the current price of the houses themselves, because let's just understand something. All we're talking about with this loan level price adjusting is we're talking about the interest rate. And we're talking about maybe even the closing cost fees. What we're not talking about is the loan amount. And I'm going to take you through the loan calculator in a minute, just to remind you what this means. So we're talking about houses that are median priced above $400,000. The median price is between $400,000 and $550,000, depending upon where you are. Now, I'm in New York. It could be really bad if you're in California. But what I'm saying is the loan amount doesn't change. It's the interest rate that's being, attacked here. So if you've got, let's say Pookie and Ray Ray and Shaniqua. Oh, yeah, Pookie and Shaniqua. They're married. And they want, well, not married. Yeah, right. Pookie and his baby mama Shaniqua. Or Becky, who decided that she could do it all on her own so she doesn't need Joe. If they decide to go buy a house, right? Even if you gave them the lowest interest rate you could, even if they could subsidize those people's interest rate, they could give them a 3%. The reality is they're still paying $400,000 or $500,000 for the house. So they're still looking at a mortgage that's going to be close to $2,000. So the question is, even if you gave them a lower interest rate, would they even still be able to make the payments on the actual loan amount? That's the question. In fact, I'll go so far as to say that there's people who, even if you reduce their interest rate to zero, they probably still wouldn't be able to pay it because they have too much house. The way it's supposed to work is if you make the mistake of buying too much house, you may have to sell that house and get a smaller house. Only now, you've got such low availability of housing that if you sold out of one house, you might not be able to find another that you could actually afford. So the government's really cocked it up. They've really made a mess, an absolute mess of things. And the same people that you see on MSNBC and CNN, those dumbasses who wear those big glasses to make themselves look smart, everybody's got a fucking PhD, everybody's a genius. But meanwhile, these people don't understand basic goddamn economics or math. The simple fact is these people are telling you how great this is and how this is a victory for the Biden administration. This is really fucked up, and this is going to make things worse. It just is. Basic economics tells you that. But then again, how many of these people actually sat through an economics class? In fact, I'd wager most of them never even took civics. So anyway, what's next? It says, after a storm of criticism, the agency delayed to August 1st an upfront fee for debt-to-income ratios of 40% or more. Let me just explain what debt-to-income ratio is very quickly. In fact, they're going to. It says the ratio is calculated by dividing the home buyer's monthly debt payments by gross income. It's one of the key measures lenders use to determine whether a mortgage applicant qualifies for a loan. Very simple. Your debt-to-income ratio is exactly what it says. You take your debt, you divide it by your income. If you come out with a percentage higher than 50%, then what that means is that it takes more than 50% of your income to service your debts. The Dodd-Frank Act tried to attack the debt-to-income ratio, and they tried to actually lower it, which to some extent was a good thing. But I think they lowered it too far. But then again, that's what happens when the government gets involved. They always screw up. But the way it's supposed to work is you're not supposed to be spending more than half your monthly income on your debt. You're supposed to be spending less than half of your income on your debt. So the lower your debt-to-income ratio is, the better. But the government's cocking it up again. They're going out. And by the way, most of these people, the reason why their debt is so high is because they got student loans. They sat in school getting these goddamn PhDs. They sat in school getting their third and fourth master's degree. They're career students. They're living on campus. They eating on campus, tuition on campus. They're paying room and board on campus. And then they wonder how they graduate with, if they graduate, they wonder how do they have $300,000 in loans when they come out of school. And you wonder how you get to be $1.7 trillion in student loan debt, which is probably $1.8 trillion by now. I'd have to check it. Ms. Thompson said the postponement will help to ensure a level playing field. My ass. What about the people who worked hard? For all lenders to have sufficient time to deploy the fee. The fee changes are intended to subsidize higher risk borrowers. If you're higher risk, why are we lending you money? Like, I wish these bankers had the balls to actually come on television and say, listen, if you're high risk, we're not giving you nothing. And if we do give it to you, it's going to be high interest rate. What you need to do is get better credit. You need to do better. You need to pay your bills on time. And why would I lend you money if you're high risk? Like, that's just stupid. Why was this done? The answer is simple. It was to try and narrow the gap to access to credit. Yep, here we go. Here we go. This is the part I was looking for. I haven't even read this part yet, but I already know what's coming. Minority home buyers. So here's the thing. Here you got black people, Hispanics, gays, Irish people, whatever, and especially women, single women, specifically single women. And we're going to take the blame for everything because we're quote-unquote minorities. Well, here's a question. I'm a black man. I have an 850 credit score. Am I a minority? Well, actually, technically, I am a minority because, regardless of the black thing, I'm in the minority of credit because most people don't have an 850 credit score. So technically, I am a minority. So maybe I'm a bad example, but the bottom line is, why should I take the blame when they fucked this up and then they point at, oh well, all we did was we lowered the barrier, because this is how these politicians sound. They're all full of shit. Well, what we did was this is how Elizabeth Warren sounds. Well, what we did was we lowered the barriers so that minorities and young women, especially single mothers and unwed mothers, would be able to get these houses. We lowered the barrier. You know, I have a memory that goes back to 2006 to 2008, and I remember when we had what was called ninja loans, no income, no job, no assets. And what they were doing was they were making loans to people sight unseen on these properties, and that shit backfired, and it caused the largest recession up until that point. And now here we are in 2023, and we're in stagflation. You see what I'm talking about here? This is what's going to happen. They're going to fuck it up, and then they're going to blame everybody, the minorities. They're going to blame the minorities. But there'll always be that one black hand that raises up and says, excuse me, I had an 850 credit score. I had nothing to do with this. But I get drowned out because they're fucking up my country. I get drowned out by everybody else who's standing around me. Oh, yeah, but my credit score was 530. Excuse me, I have an 850. I have 850s. My auto loan adjusted scores are over 800. I had nothing to do with this. I owned my property before these motherfuckers fucked up. So can I please be excused? Like, my hand's up right now. My hand's up. You can't see it, but my hand is up. Can I please be excused so that I don't get blamed for this shit? You see what I'm talking about? These stupid Democrats, these idiots. You see what I'm talking about? What? There'll always be some. Oh, what are you on the plan? What do you think you above the plantation? What are you hanging with just pearly things? You hanging with Clarence Thomas? What do you think you're better than everybody? Well, I want to be able to look at the camera and say, yes, I am. Yes, I have an 850 and you don't because you didn't work as hard as I did to secure it. Yes, I own property and you're still living in your mama's basement because I worked harder than you. Or I'm, just smarter. I don't know. But that's what they do. They'd probably call me Uncle Thomas some shit. Either that or Uncle Clarence Thomas or Uncle Ruckus or whatever. It's like, listen, it has nothing to do with skin color. I graduated college with shitty credit and I did my best to improve it. These people don't want to improve anything. But you know what? Because I understand the mathematics behind it, I already understand that housing availability is so low that this probably won't make a big deal. I also understand that housing affordability, as far as the loan amount goes, is so high. These prices, the loan amounts are so high. Most people who are in dire straits won't be able to buy one of these houses. It's not like they're walking into a mansion at a 3% interest rate. It's not going to happen. It's not going to happen. They're still looking at a $500,000 house at a 6%. And even if you pay down their points, they're still looking at like a $400,000 house somewhere around a 5%. It's not. So, the reality is it's not that bad. And then when you look at the numbers of the people who are probably in this situation where they would actually be in the market searching for a house and looking for a house right now actively, chances are you're talking about fewer than 50 million people. Fewer than 50 million people. Well, I have news for those 50 million people. You're going to be permanent renters. If you don't improve your credit or you don't hit the Mega Million jackpot or your parents don't leave you a lot of money instead of a lot of debt before they die, chances are you're going to be in an apartment for a long time. I will say this, because I'm almost done with this. The one thing that really does scare me, because I've seen California and I've seen, New York hasn't tried this shit, but I've seen California try to allude to this. They were actually trying to get people to take homeless people into their own houses. If they're that bold to come up with some stupid shit like that, then chances are what they'll probably try to do in the future, we have no idea how long, they may try to go after, because I'll tell you like this, and I hate diverting. Here in New York, the reason why the Democrats have no power whatsoever on Long Island is because these idiots openly tried to come after single-family houses. If you go into New York City right now, it's overcrowded. As you've seen on TV, crime's going up. But the issue is, Long Islanders will never let that happen. And the Democrats know it. So I'm going to let you read the rest of this because there's a lot more, but I think I've covered everything I need to cover here. The issue ultimately is they could someday try to force you to take other people into your house. They could be like, oh, well, you're just one person and you've got a big house. Yeah, surely you could let Maria and Jose and their children move in with you. Oh, you know, you're just one person. You live in a nice big segregated area house. You got a nice big house. Pookie, Ray Ray, and Shaniqua, they need a place to live. You can let them move in with you. We'll leave the government. I'll tell you what, the government will subsidize. Pookie, we'll give you $2,000 a month for Pookie. We'll give you $2,000 a month for Ray Ray, and we'll give you $2,000 a month for Shaniqua and her 3 kids by men she's not sure who they came by. How's that sound? So you're gonna think about it like this. You're gonna make $6,000. All you got to do is move Pookie, Ray Ray, and Shaniqua into your house. There's a very good possibility that something like that could happen. And I hate to say it, but it's a very good possibility they could try some shit like that. They could literally come to you and, you know what? Well, we're going to claim eminent domain on your basement. You know, because, Juan here. Juan is a worker. He's a good guy. He works and he needs a place to live. And you've got a perfectly large basement. Juan can move into your basement. We'll even subsidize Juan. We'll give you $1,500 a month, and Juan can sleep next to the boiler. He's used to less, but don't worry about it. There's a very good chance, because I mean, the mere fact that you see stuff like this happening, yeah, there's a very good chance that slippery slope gets really slippery. So, you know, at this point, I just don't know. But that's what it's called, loan level price adjustments. You can look this up yourself. I'll give you the link. You can look it up yourself. But that's the story. Biden has been trying to attack credit ever since he got into office. This is just one more movement to do exactly that. And the sad thing is, most people, especially these shitty politicians, they're afraid to say what it really is, and they're afraid to say exactly how it's going to affect you. So, using the Loanulator app, let's just consider if you were to find a $450,000 house, right? And the number of months should be about a 30-year fix. So that's 360 months. And the interest rate is probably going to be at least a 6. Monthly payments are going to be $2,697. So that would mean that you'd basically need either one person paying, and by the way, this is just the mortgage, one person paying $2,697 a month, or you're going to need 2 people paying at least half that. However, I could already say if this is $2,697, you could pretty much add another $700 on top of that for the taxes and the insurance. Now, it depends upon where you live, because taxes and insurance are what they are here. But I'll say it like this. If you had a house for like $300,000 and you were able to get in at a 3%, you're probably paying somewhere around $1,300 a month. And your taxes and insurance here in New York anyway are probably going to be about another $700 a month, let's say. So you'd probably be spending about $2,000, possibly $2,100 a month. But because since 2020, housing prices have skyrocketed. The issue here is not so much the interest rate. The interest here is that you're paying a higher interest rate on a higher loan amount. So if the house is $450,000, even if they lower the person's interest rate to a 5%, they're still paying $2,415 a month. Lowering it even 1% is only going to save you $200. Now, the sad thing about it is, had this been at 3%, you'd be paying $18.97. So you see what's happened here? Because of the Federal Reserve being forced to clean up its own mess and having to raise these interest rates, that $450,000 house at a 3% could have cost you about $1,900 a month. But instead, you're probably facing a 6.5, and you're going to end up somewhere around $2,844. So right there, you're spending over $800 more a month simply because of the interest. So what they're proposing is that they reduce the interest on somebody else's back who has stronger credit. You know what that sounds like to me? That sounds like co-signing. That's what it kind of sounds like. And I mean, it's not the exact same thing. A co-signing is, let's say you go into the car dealership or the home loans or whatever, and your credit sucks. So they're like, well, we can't do much for you. You're going to have to come back with a co-borrower. So you go get your mom or your wife or your auntie or something, and they have better credit. So they sign it. So now the bank uses their credit instead of yours. And that helps you to get a loan that you didn't really deserve and you shouldn't have been allowed to get. That's kind of what this is like. Because what you're doing is you're making higher credit holders pay to subsidize the lower credit score holders. I mean, maybe you think about it differently, but this is the way I see it. And the sad thing is, even with that loan amount and that interest rate, at the end of this interest rate, you're going to have spent $574,000. You'll have paid a total of $1,023,000, or I could say $1,024,000, because the interest alone is more than $500,000. Now here, you're buying a house for $450,000, but you're paying more than $500,000 in interest. Do you understand where this is going? That's just insane. Could you even think about that? That's insane. You're buying a $450,000 house, but you're paying more than $550,000 in interest. I wish I could say that I believed that a housing crash was coming, but I don't believe it. I don't believe it. See, the problem is there's too many people who've already bought their houses at 3%. And those people aren't selling. Those people are going to keep those properties. Those people are going to hold on to those properties indefinitely. They're not going to sell. So my thing is, granted, there's always fluctuations in the market. There's always dead people who have to sell, people who have no inheritors, who have no children to leave their property to. Houses that get consumed by the state resells them, the banks take them back, the bank resells them. Yeah, there's always going to be those little fluctuations in the market, but the problem is most of those are not happening where you want them to be happening. They're not happening in the big cities, the metropolitan areas. They're happening in places you probably don't want to live. Yeah, there's a lot of houses up in, and you know what really bothers me? There's always some idiot or some asshole that comes on to these videos. Oh, well, you don't have to pay $400,000 for a house. Listen, what I'm saying is, if you want to live in a certain place, chances are you're going to have to pay that much. And I'm not talking about wholesaling, which happens to be illegal in some states. And I'm not talking about buying distressed properties where you have to take out almost twice as much money to rebuild them. You have to rehab them. You have to take out a rehab loan. I'm not talking about that. I'm talking about a regular house. A couple is trying to buy a regular house. A couple having to spend this kind of money, because if you're saying that the mortgage alone is $2,844, that means that the tax and insurance are going to make that mortgage and that tax and that insurance at least $3,500 a month, which means that when you add in your utilities, you're at $4,000 a month. Easy. So that means that both you and your boo are going to have to come up with $2,000 a month. The only way that's happening, is if you both are making about $90,000 a year at least, and you're both content driving shitty cars. And that's the only way. That's the only way. This is a mess. It's a monumental mess. And thanks to Biden's loan level price adjusting, it's only going to get worse.